Hello, fellow investors. Did you ever wonder what you should invest in? Let's say you have $50,000 and you're a stock investor. You invest in individual stocks. How should you invest this money? My name is Grant Gelati. I run a stock investing club. It's called the BTMA Wealth Builders Club. And my clients often ask me these kinds of questions. I have $20,000 to invest. How should I invest it? I have $50,000. How should I invest it? So I'm not going to give you personal advice on what you should do. I'm just going to tell you what I do. So basically, if I have a chunk, let's say $50,000 that I need to invest. Now, I want to make the most profit that I can and reduce my risk by the most that I can. All right? So a lot of people believe and they hear about diversification. Now, diversification is good to avoid risk, but let me let you in on a little secret here. What a lot of people don't keep in mind is that if you diversify among good companies, so-so companies, and poor companies, you're actually increasing your risk and reducing your profits. On the other hand, if you diversify among only good companies, the best of the best, at the best prices, then you actually increase your risk of profits and you greatly reduce your risk, okay? So, a lot of these mutual funds that are available, they consistently underperform against the S&P 500. A lot of times just because they're made up of all of these different companies, but the problem is they're good companies, so-so companies, and poor companies, and it actually reduces their profits and increases your risk. So on the other hand, I follow Warren Buffett's system. He actually focuses his money whenever he finds a really good company at a bargain price, and then he goes pretty much all in with these companies. But even still, he does diversify because he tries to buy companies that are in a little bit different of an industry, so not all of your money is in one industry, and also that you try to split it up so that you're not putting all of your money in one single company. You still want to try to diversify over a few great companies at bargain prices and not just one, okay? So that's what I would do. And how to find these great companies? First, you want to buy companies that you know of. You want to buy companies that you know the product, you know the service. You want to ask yourself if this company has been around for 10 or more years. If in 10 or more years in the future, if the company will still be around and they'll be selling the same product or service successfully. Next, you want to ask yourself, if you buy this company, would you be willing, if the market crashed tomorrow, would you be willing to hold this company for the next 10 years if you needed to? So just asking yourself these questions, you're really going to eliminate your risk and you're going to buy a company that's good for you. You're going to buy a good company. If you want help in picking good companies at bargain prices or a way to narrow down a list of, say, the S&P 500, if you want to narrow it down to just maybe 5 stocks that you should consider buying, then I recommend looking at the BTMA stock spreadsheet. Now, you can look at any analyzer. There are a lot of stock analyzers available. I'll recommend my product here, and you can check it out. I'll even provide you with a free BTMA stock spreadsheet that will do this for you. So you can put in stocks, and it'll tell you whether it's a good company and if it's at a bargain price. And once you get that information, then you want to ask yourself those questions that I talked about earlier. Do I know the company? Do I know the product, service? And so on. Hope this information is helpful for you. I'm going to put a link for the BTMA stock spreadsheet that you can get for free. Also, I'll put a link to the BTMA Wealth Builders Club that I offer for serious investors. Hope you enjoyed this. Have a great day.